This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on May the 4th, 2012. Our time is 8:39 Mountain, 10:39 Eastern. Radio show runs AM 640 Toronto, 630 CHED Edmonton, QR 77 in Calgary. If you ever miss a radio show, you can be a part of the podcast. Go to Harold's website, HESradio.com. You can sign up for the podcast, and you can hear archived shows there. As we start our show this morning, breaking news, job numbers out of the United States, and they are not good. In fact, they gained 115,000 jobs. They had expected 168,000, around 160 to 168,000. The percentage of people unemployed went down a tick to 8.1%. The reason that was the case, according to Zero Hedge, is the labor force participation rate dipped to a new 30-year low, just 64.3%. People participating in the labor force. In fact, people not participating in the labor force went down by 522,000. Labor force participation rate, the lowest since 1981. Harold, they try and put a happy face on these things, but if you look at what's happening in the United States, what's happening in Europe, Spain in recession, the UK in recession, Europe really in chaos, the United States, serious problems in the housing market, the jobs numbers terrible. Now is the time to be very, very cautious, as we've said for quite some time.
You bet. You're 100% right, Randy. Again, we knew this was going to be a crazy, volatile year because it's an election year in the United States. But with what's happening in Europe at this point here, it's extremely concerning when you're seeing what's happening with Spain. We went through what happened with Greece and the destruction, of their economy there. And there's just no doubt that all of Europe, or most of Europe, is in a severe recession. But it's also got depression-type unemployment numbers, because the unemployment numbers are over 10%, which is substantial. In fact, in Spain, I believe it's 25%, and that's what happened. The numbers that we saw back in 29-30, there was 25% unemployment, and amongst the young people, both in Europe and in the United States, the unemployment rate is over 50%. In the United States, one of the biggest problems, amongst other massive problems that they have, is the fact that the unfortunate young people that have got out of college cannot repay their loans because there's no jobs available. So you're talking that in Europe, Spain has got 25% unemployment, so does Greece, and they've got 50% unemployment amongst young people. That's a recipe for disaster. The fact is that the gold and silver markets and all of the markets have been extremely volatile this year. Again, they're trying to posture to show that the economy in the United States is actually doing better, but it isn't. We've been recommending oil very heavily, and we're very bullish on oil, but we also felt that oil would be the most volatile of all markets, and we're certainly seeing that this week. In actual fact, we had oil prices up to $106 to $107 during the week, and now the market's down $4 today and actually dropped below 100 for the first time in several months. That does not take away any bullishness from the market whatsoever. Again, understand that when oil prices get high in an election year, this is not an unusual situation. On top of that, there was a buildup of oil stocks this week, and that's why the market fell off. All in all, gold's trading at $16.50. It's up about $9 on the day. Silver market's trading back above the $30 level. Both of those markets are trading within the range. The range for gold and silver, on the low side, there's very heavy support for gold at the 1580 level, and also at 1625. We're sitting at around 1640, 1650 as we're taping the show. For silver, we're trading right at around $30 to $31, but there's very, very heavy support for silver at 28 and then at 26. I would be very surprised if silver broke below those levels. Oil market, as I mentioned, broke 100, is trading right now at about $98, but we're very, very bullish on oil over the longer term. The U.S. dollar is actually holding in there, which is another reason why the markets were volatile this week. The U.S. dollar is only strong against the euro. It's not strong against any other currency. The Canadian dollar is above par with the U.S. dollar, so the Canadian dollar has actually gained strength again this week. The U.S. dollar would be plummeting if it wasn't for what's happening in Europe. And again, the only thing that's supporting the U.S. dollar at this point is the fact that the euro is a weak currency. However, the euro is holding in there. The euro is trading still above the 130 level, is trading right now at about the 131 to 132 level. And again, I wouldn't be concerned about the euro unless it dropped down below 120. So all in all, the euro is holding in there, even with the horrific economy in Europe. Now, the markets don't have a direction at this point. Again, it's trading within a range. However, these markets can break out very quickly. In fact, we're looking back over time, and this market reminds me very much of the market that we saw back in 2006, when we had a very similar sideways market after the market had taken a substantial fall. The market solidified, it rebuilt a base, and then came on to make brand new highs. Obviously, the high that we saw in gold was 1900 last year. We're still extremely bullish on gold and silver. One of the major reasons that we've recommended that you don't heavily leverage your gold and silver or oil or currencies or anything like that is because we did anticipate that this type of volatility would actually happen within this market. And again, we did expect this to happen, and the market is certainly not disappointing. However, we're only missing one situation that will move the price of gold and silver substantially higher, and with the fact that a lot of the traders are out of the market at this particular point, I think the gold and silver are ready for a substantial move on the upside. What we do need to see is QE3, and I don't see any way that that's not going to happen. As bad as the U.S. economy is, the fact is that they need to inject further funds into the economy if there's any chance of the U.S. economy getting back, on track. So I see that definitely coming. I see it coming after the summertime, and I think it's going to catch a lot of the traders that are out of the market by surprise, and I do believe that by the end of this year, we will see gold and silver prices substantially higher than where they are right now. Again, very heavy support at $15.80 in gold, and in silver, $28 and $26 are the major numbers, even though I doubt that we will hit the $26 level. The other thing is that Europe is just falling substantially. I mean, it's frightening to see what's happening in Europe, and as bad as Greece is, it appears that Spain is on the verge of destruction financially. In fact, if you read the financials this week, some of the most frightening articles have come out about the world economy, and again, most of it is centering around what's happening in Europe. Now, as confusing as it is, there's no doubt in my mind, the fact is that as Europe continues to fall, you're going to see that several of these countries that are on the verge of bankruptcy will have to go back to their old currencies. And by doing so, it's going to reduce the buying power of their currency substantially, because again, the euro is still a strong currency. In fact, the euro is stronger than the U.S. dollar. So if Italy or Spain or Portugal or any of these countries have to go back to their old currency, it's going to be at a fraction of what the euro is right now, which is going to bring on massive inflation. So the whole thing about this situation in Europe, no matter how bad things get, we are looking at massive inflation because their currency just won't buy enough. And again, with oil prices and food prices still high and the cost of living still high, it's a disastrous situation for Europe. However, as bad as the situation is in Europe, the situation in the United States is as bad and possibly going to get worse. In the United States, if the real estate market does not improve, and at this point it appears that there's no chance of that happening, I do not see that we can have a recovery in the United States. The middle class is the most important class in the U.S. and in Canada and in most other countries. That's where most of the taxes are paid, and basically, the middle class in the United States just got absolutely hammered. They lost their money in the stock market, then they lost their money in the real estate market, then they lost everything in the job market. So basically, I just don't see that the real estate market in the U.S. is going to get any better for at least the next decade. And the fact is that if the middle class cannot start to increase the value of the real estate market, if they don't see the value of their homes increase, they will never, ever make back their money, because that's where most people have most of their invested capital is in their home. And right now, the fact is that the home prices are still dropping in the United States, and even people that have bought recently are finding that they're upside down, because the fact is that prices have still dropped, and interest rates are not as low for real estate as they should be. The other thing that we talked about last week, I believe, is one of the major catalysts that will move the price of gold and silver substantially higher, which is the margin requirements that are required in the futures market. You see, most of gold and silver is traded in the futures market, as are most commodities. So the fact is that when gold and silver hit their highs, silver at 50, gold at 1900, what happened at that point was that the powers that be, the government or the exchanges, whatever you want to look at, they really ruined for the short term the gold and silver market. They raised margin requirements so substantially that it made it financially almost impossible for the regular person to trade the gold and silver market. So they raised the margin requirements so substantially over a short period of time that they took all the sizzle out of the market, and basically investors went elsewhere where they got better value for their money trading the other commodity markets. What I'm starting to see right now is that the margin requirements are starting to come down in the futures markets and on the exchanges for gold and silver. And as fewer and fewer people are trading gold and silver at this point in the futures market because of the high margin requirements, again, that's why gold and silver prices have been so lackluster lately. But now what we're starting to see is that they are starting to reduce the cost of doing business again in the futures market, and that's another thing that's going to catch the market by surprise. When they start to bring down, which they are doing now, the marginal requirements for gold and silver in the futures market, it's going to bring in more investors and more speculators, and again, at the right time, you will see the price of gold and silver absolutely skyrocket. What I would do at this particular point, realizing that we're going to have massive inflation out of Europe coming up, probably just after the summertime, and we're going to see massive inflation in the United States over the next 3 to 4 years, gold and silver and diamonds are still your best bet for protecting what you have and making money over the next decade. There is no doubt in my mind that the inflation that is coming is going to be the highest that we have ever seen. Back in 1979 and 80, we had double-digit inflation, which brought gold prices to $850 and silver prices to $50. We also saw interest rates go to 22%. I believe we're heading back into the same direction. Even though interest rates are low at this point, there's just no way in the world that the Federal Reserve will be able to keep interest rates low. So again, no matter how boring these markets have been over the past 7-8 months, again, a lot of it was to do with the fact that the exchanges raised the margin requirements. They're now starting to come down. You're going to start to see more action in the market after the summertime, and I think that we're going to get phenomenal opportunities to buy gold and silver. In my opinion, silver at this level is $20 below where the market was a few months ago when it hit 50, which is just a tremendous buying opportunity. And gold and silver and diamonds are your hedge against inflation. They always have been. In 1979 and 80, when we had massive inflation, we had gold going from basically $32 or $35 back in 1972. By 1980, we had $850 gold. We saw silver go in the same time period from $1.25 all the way up to $52. And we saw oil prices skyrocket, and we saw colored diamonds increase by 500% during that particular time, and interest rates went to 22%. Again, get ready for a very similar market move. What we want to do at this point is get ready for what's going to happen after the summertime, and the closer we get to elections, we're going to start to see more and more volatility, but I do believe that that volatility is going to help us to see gold and silver prices skyrocket by the end of this year.
A legendary fund manager, Hugh Hendry, said this week on Europe, you can't make up how bad it is. In fact, one of his worst fears is that his money and his clients' money will be confiscated over in Europe. He has concerns that they may nationalize the banks in France. That's why we're saying have hard assets. Have that real estate in your pocket, diamonds, gold, silver. 1-800-623-2002. That is the number to call to learn about investing in precious metals. There's only one company Harold recommends you use. That is Worldwide Precious Metals. They've been in business for 10 years, and they're celebrating their 10th anniversary as Canada's and one of the world's leading bullion dealers. To celebrate, they have an anniversary incentive. If you'd like to find out more, go to their website, wwpmc.com, or call 1-866-623-2002, 1-866-623-2002. Get our free weekly newsletter. This is a must-read newsletter this week. We have our charts of the week, quotes and quick hits, information on diamonds, gold, silver, the sovereign debt crisis, U.S. debt and deficit problems continue, the real estate market, the stock market, and oil and natural gas. 1-866-623-2002. Connect with Worldwide Precious Metals. Find out about their anniversary incentives and start your own precious metals investment account today. That insurance policy in your portfolio. Some of the top stories coming out this week that we have in our newsletter. Elf Field, very highly regarded as an analyst when it comes to the gold and silver market. He believes the odds now suggest that the gold correction bottomed at $1,612 on April 4th, 2012, and that the gold market is in the early stages of a sharp upward move. He says the crisis in Europe, which seems destined to come to a head soon, will bring an arrangement between the United States Fed and Europe into focus. This is the time when precious metals may make a dramatic upward move. Warren Buffett may not understand it, but this is why people buy gold and other precious metals as an insurance policy to protect their savings and wealth in times when the threat of financial or economic catastrophe appears to be inevitable. When you have somebody like Hugh Henry coming out and saying people don't realize how bad it is in Europe, it gets you thinking about where gold and silver could go to. I always used to believe that 2,000, 3,000, that seemed very reasonable. I'm of the opinion now that because of how bad things are getting, we could see 4,000, 5,000, 6,000, maybe even 7,000. In fact, that came out this week. Gold may touch $7,000 per ounce before the end of the uptrend, according to Bank of America analyst McNeil Curry. And he says the volatility was nowhere near extreme enough to convince him that precious metals' long-term uptrend was nearing an end. In fact, he was at a Market Technician Association symposium, and he said from an Elliott Wave perspective, what we have seen is a solid, orderly advance, and he says any long-term commodity advance tends to end with a massive speculative blow-off. They don't end quietly, and he is actually projecting an ascent to levels somewhere between $3,000 to $5,000 and potentially $7,000 per ounce before the rally is over in the next 3 to 5 years, maybe even longer. Also, Citibank coming out this week. They're very bullish on gold. Tom Fitzpatrick, a 28-year veteran and top analyst at Citibank, says we're very much biased to believe that we are in a consolidation in gold, a platform before it moves much higher. And how much higher? And you can see it on our newsletter, 2 different charts, and read the full story. They actually believe medium term we could hit $3,400 gold, and over the next 12 months, $2,400 gold. So we're starting to see, Harold, some very strong predictions from some top-flight analysts, which we've always believed gold and silver is the place to be, hard assets, and so many people agreeing with us with what's going on around the world financially, economically, geopolitically. Now is the time to have an allocation of hard assets, precious metals.
Never been more important. Again, I know these are confusing times. I know that, a lot of us want to see the markets move again. But again, every market has its time, and what we really need to see is, again, certain situations happen in order for these metals to break out again. One of them is going to be money put back into the system, which means that the U.S. will be printing a slew of money in order to put, probably close to $1 trillion back into the marketplace in order to boost the economy. And again, you would think that would happen prior to the election because, again, we know that President Obama definitely wants to get reelected. And the fact is that with a sluggish economy, there's only so many numbers that you can play with to make things look better than they are. But obviously, if they're trying to make the employment numbers look good, they certainly didn't do a good job this week and last week because the employment numbers look terrible. And again, going into the summertime, I don't see how that's going to improve. So all in all, there's just no doubt in my mind personally, I have not sold 1 ounce of gold or 1 ounce of silver that I've collected over the last 10, 11 years. As far as I'm concerned, gold, silver, and diamonds are the best investments to make. They're the safest investments to make, and again, will respond to everything that's happening in the world once the situations really start to kick in. So with what's happening in Europe, there is just no doubt that the ramification of what's going to happen in Europe is extremely inflationary. I know it's extremely confusing as to how a country can go bankrupt and what's going to happen and how they're going to get out of it, but things are really bad in Europe, and they're going to have to go back to their old currencies, and that's going to be at about 1/4 to 1/3 of what they're trading at this point, and it just has to bring on massive inflation.
The telephone number to learn more and invest in precious metals, 1-866-623-2002. The website is wwpmc.com. The company Harold recommends you use is Worldwide Precious Metals, a Canadian company in business for 10 years. Speak with them. Let them earn your business. They know all the ins and outs of the precious metals markets. They're the experts in this very specialized field. Let them help you start your own precious metals investment account today. In fact, the telephone number again, write it down, 1-866-623-2002. To give you an idea of where silver could go, depending on the gold price, we always keep an eye on the gold to silver ratio. And right now it's about 53-54 to 1. If we had $2,000 gold, a 50-to-1 ratio would give us $40 silver. A 40-to-1 ratio would give us $50 silver. A 30-to-1, $66, 20-to-1, $100. And I know a lot of people believe that it could go back to the historic norm of around 15-to-1. That would give us $133 silver at $2,000. As we improve the number to $2,500 gold, 50-to-1 would be $50 silver, 40-to-1 would be $62.50, 30-to-1 $83, 20-to-1 $125, and 15-to-1 $166. As you can see, depending on what is leading, either gold or silver, leading the bull market, they each take turns leading this market. The gold to silver ratio will improve in one or the other's direction. Right now it's improving in favor of gold. In the past, we've seen it improving in the favor of silver. And we believe that going forward, it will improve in silver's favor. You will see those numbers go down, and that gives you an idea exactly of the potential of these markets going forward. And if we get into 3,000, 4,000, 5,000, obviously the numbers increase exponentially. The telephone number to invest in precious metals, speak with Worldwide Precious Metals, 1-866-623-2002, 1-866-623-2002. Their website is wwpmc.com. Speak with them about getting our free weekly newsletter. They send it out via email free of charge every week. Get your name on the list. Going to come back and talk about diamonds and hsfineauctions.com and their auction coming up on May 22nd. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on May the 4th, 2012. Our time is 9:04 Mountain, 11:04 Eastern. Radio show runs AM 640 in Toronto, 630 CHED, Edmonton, QR 77 in Calgary. Learn more about investing in precious metals. Speak with Worldwide Precious Metals. The company Harold recommends you use is their 10th anniversary as one of Canada's and the world's leading bullion dealers. And to celebrate their anniversary, they have an incentive. Give them a call, 1-866-623-2002, or go to wwpmc.com for all the details. Harold's website for diamonds is rarecoloreddiamonds.com, rarecoloreddiamonds.com. You can speak with Harold about diamonds at 1-800-432-1022, and his auction website is hsfineauctions.com. We made a change in the auction date because of the long weekend. The next auction is May 22nd at 8 p.m. Eastern, 6 p.m. Mountain. May 22nd, 8 p.m. Eastern, 6 p.m. Mountain. You can go to hsfineauctions.com and take a look at some of the items that will be auctioned. Our featured diamond this week, go to the featured diamond section of rarecoloreddiamonds.com. You can also get the newsletter from Harold. We have a section on diamonds, and it has the featured diamond. This week's featured diamond is a 1.51 carat oval cut, fancy, light, yellow, internally flawless diamond. And when it comes to famous yellow diamonds, one of the largest yellow diamonds ever discovered was the Tiffany Yellow. It weighed 287.42 carats in the rough when it was discovered in 1878 in the Kimberley mine in South Africa, and was cut into a cushion shape of 128.54 carats with 90 facets, 32 more than a traditional round brilliant to maximize its brilliance. The diamond is known to have been worn only by 2 women during its lifetime. It was worn by Mrs. Sheldon Whitehouse in 1957 at a Tiffany ball in Newport, Rhode Island, mounted for the occasion in a necklace of white diamonds, and it was subsequently worn by Audrey Hepburn in 1961 for publicity photographs. The movie was Breakfast at Tiffany's. Harold, yellow diamonds have a long, long history. We know that from the Tiffany Yellow, and it's amazing how reds and blues and pinks have become very, very popular, but the one diamond that is really catching up to them and really getting everyone's attention at all the auctions, the auction results we've had, yellow diamonds are red hot right now.
You bet, and that's what I'm very proud of, because we brought that to our clients long before these prices started to become public. So the fact is that many of my clients have owned these yellow flawless diamonds, for decades now. Back in 1980, you could have bought a yellow flawless diamond, 1 carat, for about $500. Now they're close to $20,000. They go up by 25% a year. They double every 4 years in price, except during times of high inflation. In 79-80, these diamonds went up 500% in 2 years. As an investment, there's nothing better. They never decline in value. There's so few of them available. But again, you're talking the most sought-after diamonds, and just looking at what's happening at auction now, you'll realize that these yellow flawless diamonds are just skyrocketing in price. In fact, in 2011, there was a 2.5 carat marquee cut, fancy vivid yellow. Vivid is the highest color grade, the best color you can get. And it was not flawless, though. It was close. It was a VVS1 with a Bulgari setting. The experts at Christie's said the diamond would sell between $110,000 and $150,000, and it sold for $960,000. In fact, if you look at the auction results lately over the last couple of years, yellow diamonds have just skyrocketed in price. Again, we've been recommending yellow flawless diamonds to our clients as a very safe investment, but an amazing investment for retirement, because again, where you cannot depend on the stock markets or really the volatile markets for your retirement, to put a $20,000 diamond away for the next 10 years could be a $100,000 return for you in the yellow flawless diamond. If you go on our website, rarecoloreddiamonds.com, rarecoloreddiamonds.com, spelled both Canadian and American, you can go to the loose diamond section, and in the loose diamond section is all the different colors. Diamonds come in several different colors, red being the most expensive and the rarest. The fact is that red diamonds start at about $2 to $2.5 million a carat. Where they are phenomenal investment diamonds, those are not the diamonds necessarily that we recommend to our clients. In fact, not everybody has millions of dollars to make an investment. Most of my clients invest under $50,000 in diamonds. And the diamonds that I recommend very strongly are the fancy yellow, fancy intense yellow, and fancy vivid yellow diamonds. Now, from time to time, a fancy light yellow diamond will come out that's really spectacular, where the color is strong. They're known as canary diamonds, and they're very famous. And if you look at the featured diamond this week, we featured a beautiful 151 oval fancy light yellow flawless diamond. It's a magnificent diamond with a beautiful color to it, and the fact is that ovals look larger than any other diamond. This diamond looks like it's almost 2 carats. It's a beautiful 1.5 carat oval, fancy light yellow, internally flawless. The reason that I featured this diamond this week is 2 reasons. 3 reasons, actually. Number 1, it's an amazing investment diamond that you'll do extremely well with. Number 2, the color on it was very strong, so it was bordering on fancy yellow, which again is one of the best colors. And number 3, the fact is that it's reasonably priced. Where yellow flawless diamonds, fancy yellows, are upwards of $20,000 and up now, this particular diamond is in the $15,000 to $16,000 range, and it's an amazing diamond. Very seldom will you see a diamond like this at that price. So again, we featured this diamond this week. The color is beautiful, the size is beautiful, and it's a magnificent oval. And again, it's the diamond that you'll do very, very well with. See, the thing is, when inflation really starts to hit, everything goes up in value. The price of commodities goes up, the price of oil goes up, the cost of living goes up, and the price of diamonds skyrocketed. In 79 and 80, not only did colored diamonds go up 500%, but so did white diamonds. But because there were so many white diamonds available, when people started selling their diamonds in the open market, the markets fell substantially. But because there are so few colored diamonds, that never happened, and really couldn't, because you're talking about such a small percentage of diamonds are colored diamonds. So the fact is that we specialize in investment quality diamonds for our clients that are still reasonable in price. The fact is we don't need to chase after the blue diamonds that have gone up 500 or 700% in the past 5 to 7 years. We don't need to chase after the red diamonds that, again, are out of most people's price range. What I'm bringing to my clients and listeners to the radio show are diamonds that are still reasonable enough in price that they're affordable, but have potential to make gigantic moves. And the yellow flawless diamond market is that market. So if you go to the website, rarecoloreddiamonds.com, go to the loose diamonds section. The first thing you should do is go to the yellow diamonds. When you click on yellow diamonds, 3 different colors will come up: fancy yellow, fancy intense yellow, and fancy vivid yellow. Those are the 3 best colors. If you click on the fancy yellows, for example, you're going to see our selection of fancy yellow flawless diamonds, and they're magnificent. These are the diamonds that you want to own, not only for safety, but also for profit. Because again, these diamonds will double in price every 4 years, but if we're right on inflation, a $20,000 diamond can go up to a $100,000 diamond over the next 5 years if we get the heavy inflation that we feel we're going to get out of Europe and the United States. So we have beautiful diamonds, most of them over a carat, and some of them over 2 carats. Only 1 diamond in 15 million is over 2 carats, and they're extremely rare, and they go up even faster than the 1 carat yellows. So we've got maybe 10 or 12 of the fancy yellow internally flawless diamonds that are over 2 carats, and these diamonds are extraordinary. Very seldom will you see a diamond that's internally flawless, yellow, and over 2 carats. We've got diamonds actually starting at a carat and going up to over 100 carats. So we have diamonds in our collection that actually start at about $15,000, and we have diamonds that are over $30 million. So we can certainly help any of our clients with no matter what comfort level they have price-wise. But again, you do not have to spend multi-millions of dollars in diamonds in order to do well in the rare color diamond market. Look at the featured diamond. That diamond will sell very, very quickly. It's reasonably priced. It's about $15,000. It's a featured diamond this week, and it's a very spectacular diamond. By the way, the other thing about my website, Rare Color Diamonds, I invested very heavily to bring you videos. So basically, nobody else has this, but we have beautiful videos of our diamonds, and the reason that we did this, so you can see every aspect of the diamond. And the fact is that this video will show you every aspect, how beautiful the diamond is, how it's cut, the facets and everything. So again, enjoy the website, rarecoloreddiamonds.com. Also, over the next month or so, especially during the summer, you're going to see some of the most beautiful jewelry that you have ever seen. We're just about to start videoing some of our very exceptional jewelry. I mean, pieces that most people have never seen in their lifetime. We have a 2.5 carat pink diamond ring, fancy pink diamond ring coming up for sale. We've got a vivid orange-yellow diamond that's internally flawless that nobody has seen before. We've got some of the most beautiful diamonds coming up over the summer, so pay attention because, again, this is one of the best assets you could ever own. In a time of tremendous uncertainty, when countries in Europe are going bankrupt, when currencies are going to plummet, and when situations in the United States continue to get dire, it's these type of investments, alternative investments, that do best for you. They're portable private wealth. You could put $1 million diamond in your pocket and nobody would even know it, but try to cross a border with more than $10,000 in cash in your pocket and see what happens. The other thing is that very few investments do well during times of financial disarray and high inflation, and diamonds have proven over years to be that type of investment. It's also portable private wealth, and it's real estate in your pocket. Again, you could walk around with a lot of money in diamonds in your pocket and be safe with it. The other thing is that as currencies start to go bad, diamonds like this could be sold in other currencies. In fact, during our auctions, one of the biggest drawing cards is the fact that our European clients are starting to buy our diamonds because their currency is so strong in Britain, where the U.S. dollar is falling. The other thing is the Canadian dollar is very strong. The Canadian dollar is worth more than the U.S. dollar, which gives you tremendous value when buying assets bought in U.S. dollars. So again, this is a tremendous asset for you with what's coming up. With Europe going under and with what's happening in the United States and the potential of extremely high inflation, you definitely want to look at the yellow flawless diamonds. They're still affordable, but they will return tremendous returns to you over the next 5 to 10 years. The other diamonds that we recommend very highly are pink diamonds from the Argyle mine. These pink diamonds are magnificent, and it's really the Argyle mine in Western Australia that produces 95% of the world's pink diamonds. This mine is going to close down. It's going to close before 2018, more than likely, and there goes 95% of the world's pink diamonds. Like any other commodity, when the demand is high and the supplies are low, that's a recipe for substantially higher prices. And we believe these Argyle pinks are actually amongst the best investments that you could ever make. These beautiful pink diamonds will be no longer when the Argyle mine closes, which again could be in the next 6 to 8 years. So it's a longer-term investment. You want to hold on to these pink diamonds definitely until the mine closes and give it 2 years for the diamonds to run out. And we anticipate that the price of these magnificent pink diamonds can increase 10 times what they are today, meaning a $30,000 pink diamond could be a $300,000 return to you over the next 10 years. Now, one of the things about buying diamonds, and it's always been this way, is that everybody knows that diamonds appreciate in value, but there has never been a way to resell them. Unless you're buying, a 10-carat blue or a 5-carat pink, to sell it through Christie's or Sotheby's, the old adage is, how in the world am I going to sell my diamonds when they're ready to sell? And I always realized that this was the major issue with diamonds, and I've been in the investment business for 35 years. What we did is we built H. Siegel Fine Auctions. And H. Siegel Fine Auctions is an auction house that we built for our clients to resell their high-end collectibles and rare colored diamonds. Nothing like this website has ever been built before. This is the only real-time live auction website for high-end collectibles and rare colored diamonds. And again, I built this. It took 2 years to build. I've never been more proud of anything that I've built in the past, and I've had many businesses, but this is by far the most amazing. When I went to Relentless Technologies in Vancouver to build this site, I insisted that it had to be live with me selling every single piece because, to put a beautiful diamond on a website with no talking whatsoever, there's no way in the world that diamond could be sold with the sizzle that it needs to be sold. So again, when we built this auction site, and it took 2 years and an awful lot of money to do, it was imperative that it was live, real time, and that I got to sell every piece. And that's actually what's happened. It's one of the greatest websites I've ever seen in my lifetime, and we have an auction coming up. I announced last week that our next auction is going to be on May 21st, but May 21st is Victoria Day. It's a Canadian holiday. So we're going to make it on May the 22nd, which is a Tuesday evening at 8 o'clock Eastern Time and 6 o'clock Mountain Time. Now, if you go to HS Fine Auctions, that's hsfineauctions.com, you're going to see what we're going to be auctioning off on the 22nd. And this is one of the most amazing auctions that we're going to have. So go to HS for Harold Siegel, hsfineauctions with an S.com. You'll see our beautiful website. First thing you want to do is go to the catalog and see what we're offering on this auction coming up on the 22nd of May. There's some amazing coin sets. Many people over the years have bought some phenomenal coin sets through my companies, and now our clients are starting to sell off some of their amazing coin sets. And we've got several coming up for this auction. The Finland Triple Euro coin set. With what's happening with the euro in Europe, you want to own this set. It's one of the most important euro sets ever. You can view all about the euro set. You can click to enlarge it. We've got beautiful pictures and letters of authenticity. A few months ago, we had the opportunity to offer and auction off a Lewis Comfort Tiffany silver coin. We have another one coming up for auction. You've got to see the video and learn about Tiffany coins, because they have real Tiffany glass and one of the best investment coins that you can invest in. We've got the gold coin set, the 4 gold coin set, the Wildcats of Africa, the Cheetah, one of my favorite gold sets of all time. It's my personal set. Then we've got the Nature Prestige set, the Giants of Africa, another solid gold, pure gold coin set. Anybody who's bullish on gold and silver want to own these sets, but these are magnificent. These are so well done. They're out of South Africa. The other one is the Kookaburra silver coin. It's a 10-ounce proof coin. Go ahead and try to find a 10-ounce silver coin today. It's got the letter of authenticity. It's absolutely amazing. And then we're also offering the Australian Koala 1-ounce platinum coin, one of the most beautiful coins you've ever seen. Then we're going to auction a half a carat, a 52-point vivid yellow flawless diamond. When you see the video of this diamond, you'll want to buy it for certain. It's one of the best investment yellow diamonds you can get. Vivid is the best color, internally flawless is the best clarity, and when you see the color of this diamond, you'll definitely want it. It's an amazing auction diamond. Then we've got 2 diamond rings coming up, a 2.75 carat cushion cut, fancy intense yellow internally flawless diamond ring made from platinum and fine diamonds, one of the most beautiful diamond rings you've ever seen. It's worth over $100,000. We've got a 114 fancy bluish green diamond. It was just repolished, so it looks such a strong, deep blue. Look at the video on it. It's in one of the most beautiful rings, and that diamond ring is worth over $150,000 to $200,000. We've got a .35 pear-shaped fancy pink argyle. It's a bubblegum pink, beautiful pear shape. Looks like it's over a half a carat because of the width of the diamond, and look at the video on it. It's stunning. We have a 32-point vivid purplish pink argyle, one of the rarest pink argyles you can get. Vivid, again, are extremely hard to get. It's the best color, and it's like the old adage, when you buy the very best, you get the most back for it. The 2 last diamonds to come up for bid are spectacular also. A 61-point oval, fancy intense purplish pink argyle. The color on it is just amazing. And realizing that 95% of argyle diamonds, pink diamonds, are under a quarter of a carat, this is 3 times the size. It's a .61, and again, considered a very large pink. But the pièce de résistance, the diamond that will capture most of the attention, is the last diamond of the night. It's a 61-point radiant cut, which is a square cut diamond, fancy intense, pure purple pink argyle diamond with all the documents. When you look at the video on this diamond, it's purple, ladies and gentlemen, and purples are as rare, in my opinion, as red diamonds are, and that diamond is worth over $100,000 to $150,000. So, again, the auction is going to be amazing. The catalog is up. What you want to go to is hsfineauctions.com. Look at the catalog, look at what we're going to be offering, and then go to the Getting Started section. Fill in your information, you'll get your password, and you can attend the auction. It's going to be on May the 22nd, 8 o'clock Eastern, 6 o'clock Mountain. And if you want to bid, you can bid. If you want to watch, you can watch. Last time we had over 600 people attending the auction. So again, it's a worldwide auction. We'll have visitors from Canada, from the States, from Europe, from Asia, from all over the world attending our auction. So again, I built this for you, the listeners to our radio show, people that have purchased collectibles from me over the last decade or so. This is for you, and it's one of the greatest websites ever, and it's a live auction website to resell high-end collectibles and rare colored diamonds.
RareColorDiamonds.com. Speak with Harold, 1-800-432-1022. hsfineauctions.com. Next auction, May 22nd, 8 p.m. Eastern, 6 p.m. Mountain. And speak with Harold about the featured diamond at RareColorDiamonds.com. One of the stories, and this is really, really big, we have about 5 minutes left in our show, and it ties into diamonds, ties into gold and silver, why you want to own them. And I thought it was quite interesting, before we get to this, equity fund redemptions in April were the largest in 17 years. It goes back to 1996. They actually, investors pulled out $18.6 billion from equity funds. And that's obviously because people are very, very concerned about what's happening in the stock market and what's happening around the world in Europe. But the United States, it has major problems as well. This was a real focus point on different websites this week, Bloomberg, Reuters, also CNBC. The United States faces numerous cliffs at the end of 2012. When the George W. Bush tax cuts expire, more than $1.1 trillion will be cut from the budget, about half of which will come from defense because of the infamous sequester of last year. The payroll tax cut will expire, as will the patch and the alternate minimum tax. If you add those up, it's probably $7 trillion worth of economic events that are going to occur in December, and there has been little to no planning for that, according to Erskine Bowles, who is the co-chairman of the President of the United States, Barack Obama's Budget Deficit Committee. In fact, a further story to that, the U.S. economy faces a fiscal cliff. Here we go with the cliffs again. According to Fed officials, two Federal Reserve officials warned that the United States could be heading for a fiscal cliff at year's end if mandated tax cuts and spending cuts are implemented. Charles Evans of Chicago called the cliff a big uncertainty, while Atlanta Fed President Dennis Lockhart said it could be a huge financial shock. Harold, we have about 4 minutes left in the show, but if you look at the money that's coming out of the stock market, people aren't stupid. They know what's going on. They've seen what's happening over in Europe and the United States with the housing and jobs numbers, the volatility. And then on top of it, you have the inactivity of Congress in the United States to deal with some major, major problems. And they may have to raise the debt ceiling again right around the time of the election in November when Obama goes up against Mitt Romney. Some huge landmines out there.
Oh, you better believe it. I'm sure they don't want to see that just prior to the election. But, again, it's all going to hit the fan. There's just no doubt about it. All you can do is prolong the agony for so long. And, again, there's no doubt that we are going to see QE3 eventually. And when they do that, the markets will respond to that in a big ways. And you really want to be concerned about what's happening in Europe and what's happening in the United States. But, again, you want to have insurance. And the best insurance is, and to make things as simple as possible without getting into major strategies, you want to be diversified. You have to have something in hard assets. Gold and silver especially will be a fabulous hedge against inflation and against weak currencies, and so will diamonds. You really want to lighten up on your stock purchases because, again, you don't invest in stocks when countries are going under and going bankrupt. So, again, with as frightening as things are in Europe and in the United States, unless the real estate market gets better and the job numbers get better and something happens to raise the currency, it's just not going to happen. So So just be very conservative, and let's just wait this out. Again, we're in an 8-month sideways market, but again, a lot of it had to do with the fact that the exchanges raised the margin requirements so high that it took all the sizzle out of the market. As that starts to come down, and I know for a fact it will, we're going to start to see the action build up again. So again, I do believe that gold and silver are still priced very reasonably at this price, and again, I think silver is still the best buy of all. I love the diamond market, especially the yellow flawless and the pink diamond market at this time. I believe we're going to see another explosion. In fact, prices could go up substantially right after September.
Thank you very much, Harold Siegel.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
Learn about investing in precious metals, worldwide precious metals, wwpmc.com, telephone number 1-866-623-2002. Speak with Harold at rarecoloreddiamonds.com, telephone number 1-800-432-1022. hsfineauctions.com. Take a look at the items to be auctioned off. Next auction, May 22nd, 8 p.m. Eastern, 6 p.m. Mountain. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.